Welcome back. Today we got exciting news that Palantir has finally secured the long-awaited NHS contract. I'm going to talk about not just what it means for the stock price today, but what it means for the consensus for valuation into the future going forwards. But first I want to talk about how this contract came to be. And I was saying when the stock was in the $15 to $18 range that I thought there was a decent probability, not entirely probable, that it would happen this year because it had gotten delayed. But I did think it was going to happen, and I did think it was going to send the stock higher leading into that announcement. And you'll remember there were a lot of rumors of this happening a couple months ago, and I was in the camp of this taking longer than anticipated. But this was certainly a talking point for when I was even doing earlier valuation analysis and talking about the NHS deal as a catalyst for Palantir stock. This was back in April, and this is when I was talking about Palantir being significantly undervalued at $8 per share. So that leads to my question that I posed on Twitter today to see how people think of this announcement that we just got earlier today. It's interesting that Palantir has not yet put this on their investor relations page, but they have a blog talking about it. It's gotten picked up all over the news outlets. So it is confirmed, but I wanted to know what people think about Palantir stock trading at $22 today. Was it priced in? Was the news priced in? The stock has since sold down to $20. Of course, short term, nobody really cares whether it's 22, 20, 18. We're not here for that. But I wanted to know what people think, and so far we have 300 votes. And it seems like most people think this actually has been built into Palantir stock since I was talking about $8 earlier this year, $15, $18, and now it's announced. So my message to people has been, this has been so widely expected. We didn't know when it was going to happen. We didn't know the exact size, but we knew it was eventually going to happen. So that brings me to my valuation analysis, and I've been updating my valuation model. And here you can see my numbers versus the Wall Street consensus estimates. So I have revenue about 8% higher this year. It's definitely not going to happen, but it's just building in my forecast for 2023, 2024, 2025, and beyond. So you can see this is where I think the NHS contract is going to differentiate from what the street is currently pricing in, because obviously Wall Street cannot factor in anything that is not yet confirmed. That's why they don't price in AIP. That's why they couldn't price in this contract. So they are going to have to increase their models and increase their financials, which is a good thing. So that's what I'm attempting to do before we get those notes that I will be sharing with you for their thoughts on the financial impact. So I think this could have a pretty big effect on where the financials are going to be for Palantir. Like 14% higher next year, maybe 20% higher the year after. And the EPS, I think, will follow a similar trajectory. And Wall Street will actually have to increase their estimates going forward, which is great news for the stock and for the news and everything surrounding PLTR. So just checking back in on how you would value Palantir against some peers. I think these are some pretty good peers, given that they trade at a pretty good premium. So we have Tyler Technologies, they do government contracts, and we have Datadog, which we've all heard about. MongoDB is another one, and I just compare Palantir's valuation against them and do a benchmarking. And it seems like fair valuation for Palantir, based on these three companies and where they trade, is about $18 per share, because I put Palantir in the 65th percentile of this group. Now, there's really no great comp for Palantir, which makes this difficult, but I do think it's worth noting that Palantir has now a bit of a premium valuation compared to when it was $8 and not $18. So all of that to say, I think there has been, a premium applied to Palantir in the AI space for good reason, but it's worth noting that you could potentially overpay for Palantir depending on your time horizon, right? If your time horizon is less than a year, that's where you really want to be careful. If it's 10 years, then you might be a little more willing to pay a premium, which people are currently doing, which I think is fine. Let's head on over to the DCF. So this is where those numbers I was showing you earlier have started to come in. So I have a perpetual growth rate of 4%, a discount rate of 10%, and all of the historical financials here. And you can see my growth rates I have for Palantir, 26%, and then winding down through the rest of the decade. You can feel free to disagree with that. I have gross margins up to 85% through the end of the decade. And I have operating margins really getting into best in class through the end of the decade. So that's what you can see here. Also, these are all GAAP figures, which is backing out stock-based compensation. If you sum all of these cash flows, discount them at the appropriate discount rate, and bring them back to the present day, you get a valuation of, once again, about $18 per share. So this is where the question comes into play with Palantir currently at $20 per share. So that's just a downside of 10%, basically, is what this whole set of financial projections leads to. So the question is, right, obviously this isn't factoring in any AIP. So basically what these numbers are saying, if you agree with the inputs, is that Palantir is currently fairly valued based on their government and commercial projects, not including AIP once again, because we don't know. Well, I've made videos speculating on how they're actually going to work with the pricing on that, but we don't know exactly. So what I wanted to focus this video on is not just that I think based on these numbers, Palantir is fairly valued, because there obviously is going to be a range between fair value. But I also want to say, what are the implications of this massive contract that Palantir is getting over however many years, 7 years, 5 years, whatever it ends up being. And the implications, I believe, is that when Palantir gets an award like this, it is such a big deal. Everyone hears about it. Everyone knows Palantir's been chosen. They've gone through this rigorous diligence process with the NHS, and despite all of the concerns, despite other players available, Palantir has been chosen. The NHS did not want to choose Palantir. I mean, you look at how long it took, all the criticism. They didn't want to, but they had to, because Palantir is the best and only solution that's cost effective and could deliver the results they were looking for. So what does that mean? Well, I think government growth is actually going to increase because of this, not just based on NHS, which I believe I've factored in already, but because of other deals they'll be getting, because the precedent that the NHS has set with this massive contract, giving Palantir such a sizable amount. The question is, how does Palantir guide based on this contract and the negotiations they've been having and the impact they see it going elsewhere? So it really could be a lot higher. So you could ask yourself, would it start to look more like this bull case here, where they're growing above 20% in government and commercial is growing, 30s before it starts to slow down, right? Because they will reach maturity at some point, probably not the end of the decade, but let's actually take a look and see what that bull case would look like, which I think is more likely than it was yesterday. So that's where you can see the present value of the stock worth $25. So some people don't understand what I mean by present value. That means I think if you're viewing the bull case on this situation, Palantir should be worth $25 today, not 10 years from now, today. Meaning, if it's trading at $20, there's a 23% gap that could be closed at any time once Wall Street understands the numbers here, and those numbers could indeed be low. So that's basically the takeaway from this, in my opinion, is the NHS has much wider reaching consequences for the future of Palantir, specifically their government arm. And what that means for the stock price is I think there is more upside. You got to be careful about the premium valuation that Palantir's been getting, right? We'll see what happens with Nvidia today. But that's my takeaway from this. I think the deal was priced in, but the wider reaching consequences of the deal have not been priced in. So I'd love to know what you think in the comments. Until next time.